Hey guys, DJ from PTA. Want to go over trade here. Going to go over some market sentiment before I begin. But solid day for the team. Had a couple trades, couple stocks that move that we talked about in the Discord. Guys, again, if you want to be a part of the Discord, limited time offer, make sure you jump in there. It's totally free right now. And we're just trying to build a nice community of traders that actually want to learn how to trade and be better at their craft. So first thing I want to go over is SPY. Had a down day today. What I'm thinking, like I told you guys on previous videos, go in the link and check out the other videos as well. But I think we're going to get another leg down. I think the market is just doing a bounce. You know, people taking profit in this last week. So to kind of give you an idea, the last week was really, really good, and then for us to end or start the week out this week down, you know, after the holiday, you know, that's what I expect. I think we're gonna have a down period this summer. I think this thing's gonna keep going down, and it's gonna, you know, slowly bounce its way down. So I think it's gonna, you know, go here, and it's gonna probably, I wouldn't be surprised if we get back down to about this 360. So the way I come up with that conclusion is from the last bounce. So the last trending down was about 39 points. The last one after that was 28 points. So even if we get between somewhere in between there, we're looking at 35 points. So 35 points would be somewhere right there, which would be back down at the 380 area. But, you know, we get anywhere closer to that 45 points, then, you know, and what I mean by 45 points, let me remeasure that. It's actually from here to here. It's 43 points. So 43 points will be about right here. It puts us right around 373. Yeah, 370s, 373 area. So something to think about when you're looking at where it could possibly go on that swing down. So it's just something to think about. Yeah, it's one of those things, you know, you got to keep an eye on what's going on in the overall market. GOVX was one that they talked about. I didn't really like the price action on it. That's just me personally. Just didn't really see the price action in it that I like. Did pop up and then get a nice little move up. I mean, that move was basically 30 cents. Don't really like playing things like that. Let's shoot over to, let's see something here. So the first one I want to go over is SIGA. Again, we had a nice run up, pull back, run up, back to that area, the 1480s, pull back. So if you look at this, it's kind of like a A, B, and then C was the push out. This became A, and then B was here, and then we got us a nice rip. Now, first thing in the morning when I took a look at this, I sort of was looking at the levels. So the levels are this here, looking off the daily. We had a level here. We had close level here. We also had a level here at 1247. So with this double level here, it didn't surprise me that it got into that zone and pulled back. Those were pretty much the key areas. And then the close or the low, yesterday's low, and then also the close. So that was kind of a key area where it may have been some type of push. So let's zero this into let's say the hour. So when we look at this trade, I was taking it from the previous day, looking at this downward trend. So for me, you know, I was kind of connecting it like this. So when I saw this, I sort of was looking for some type of bounce into that. So to zero it down, let's go down to the 5 minute. Now these are all key areas. So again, this was previous day low, close, so on and so forth. So when it broke out of this pattern, it came out. I mean, you can look at this and see. Let's go to the 1 minute. So when you can see a stock moving like that, I mean, could have brought it about here, 1066 on the pull, risking to the low, but I like to see that first pull. So the first thing I looked at when I went back and looked at this was this pattern here. So it did break on the higher time frame, broke out, and then it actually started to pull down. So when I was looking at this, I kind of looked at it from this point of view here. I'm trying to draw this line exactly how I had it before, about right there. So when I started looking at this, zeroing in on the 1 minute to look for a time entry, you can see that the stock came, regather itself, and then extended to the breakout. So your entry was around the 1070s, 1080s, depending on your risk to reward tolerance. 1080s, risking 14 cents, and then the nice move up was a nice clean dollar. Once it got over this zone, this is what we call, and a lot of traders, you might hear this in different chats or people talk about it, but what it's called is basically a red to green. So a red to green is when the stock go from being red for the day to now it's turning green, meaning that it's in the green zone. We're actually looking at, let me turn this to take that color out. So now the stock is in the green. So that line is usually when previous day closed. So red to green. So right there is where it went red to green, got us a nice shoot up, and then we had us another breakdown. It broke out, recollected, and then bounced the opposite way. So pretty decent trade. And as you can see, as it hit these areas, it came back, retested, held, broke out, hit that 1176, pulled back for the retest, gathered, and then it went straight into that zone, into that supply zone, took a little out of there, and then they eventually kept it moving down. So once it did that, came back, and now it's running after hours. So this is definitely something that's going to be on watch tomorrow, SIGA, just to see how it's going to move, because you know, with this retracing pullback and then this volume coming in after hours, this is probably going to be something worth looking at in the morning when it comes to a decent trade. So SIGA, keep that on your watch. It should be something you take a look at in the morning. Circling down, the trade that I actually traded was Tnxp. Now, the reason why I trade Tnxp was for a few reasons. They are a farm. Most of the farm stocks, anything dealing with that monkeypox or anything like that is, you know, something that people are taking a look at. Second thing was at normal volume that came in today. Just the day before, it traded at 9.8 million, and today it did 162 million. I think this stock was a bit crowded, being a low float with 18 million float, traded 162 million for the day. The range wasn't really there, so I wasn't looking for a big jump. So I was looking for a small risk, nice size gain, at least 3 to 1 or anything like that would have been good. But I played this one pretty well. I shouted it out in the Discord. Members actually learned about it pre-market because of the pre-market action. So let's kind of go over the thing to kind of get you to understand. This right here was a key area. As you can see, the stock kind of bounced and then drop from there. Same here. So next key area was that 428 area. Got a mark there. And then, like I said, at 366 was a good area as well. So again, I like to see where the stock was either getting absorbed or breaking down from. Those are all, decent and key areas. So let's go into the actual day and go down to the 1 hour. I seen this nice little run up after hours for yesterday, and then it pulled back. Then it started running up again. So which lets me know that is in an uptrend. People are looking at it, so on and so forth. Now once I started zeroing in, I started paying attention to certain things. Like this here, it made pre-market. We had a slight pullback, and then it started to kind of step. When I started to see it stepping like that on the 15, now I'm just looking for a 15 or 5 minute pullback. I end up getting it right here. So one of the key things that I was looking for was some type of play to break off of. So it was right there. So what happened in this particular trade that was really cool is that it kind of went sideways first thing in the morning. So it actually set this low, and let me draw that out for you. When it set this low, it bounced off, came back, and then set this low again. So that, that's definitely the market stepping in the right direction. So as I broke it down even further into the 1 minute, when I started looking for entry, the way I was looking at the stock to kind of give you a background on it was how it was moving. So after you got to remember that this area right here, this circle here is actually this circle here, this low. That's that right here. So when it pulled back up and hit this area, it bounced, kind of did a sideways price action right there, and then it yanked out and slammed. I knew at that point, okay, that particular candle, and let me give you a perspective on how to look at that. If you look at this candle, this was the key right there. Look at the amount of volume that came in off that candle. The only other candle that had higher volume than that was this one. This is the first attempt. So kind of look at it like a storybook. You had your first green candle, and then you had your red candle here. So let me erase this one. So you had your first green candle there. Red candle, I'm sorry. Here. That was the igniting move to the downside, which created the low. Then you had to go back up, and then you had the second one, but they didn't drill it down. So they just kind of went sideways. And then they got everybody thinking it was going to go higher, and then they slammed it with a lot of volume. So when they slammed it, I'm expecting for a downward move further down to wash it. But what happened is they did it again. They tried to slam it here and just couldn't get it lower. Then it kind of went up, bounced, created a slightly higher swing low, and then they broke it out and then do it again for another slightly higher low, and then it took off. Now it might be a lot to take in, but when you're looking at this real time, you start to develop your eyes in such a way that you start to see different things. So let me show you my entry, which was at 355, and I want you to look at that. One of the key things at looking at this is that the stock was moving higher with a basis based off of the previous low, swing low at that. So maybe the ideal entry might have been here, but you definitely want to see it move. You definitely want to see it start to play in your direction. So I got in 355 with a risk to here, which is about 15 cents. Why? Because I had already had, as I showed y'all in the chart, this move here. So when I saw this move here, this pull up, pull back, and then yank, that gave me confidence that this was like double support. So if I got in here, I can risk to here and be fine. So that's what you're looking for. You're looking to see buyers stepped in. Now, where did they step in at? Well, they stepped in a couple places for me. They stepped in here, they stepped in here, and they stepped in here. Well, this is all moving in that direction. So that gave me confidence to get in here. So when it got in here, I risked to here. So it was about 15 cents. And then from there, we got our move. And it just blazed out. Once it blazed out, it started, hole number 4 started to give me some pushback. So looking at the chart, it started giving me pushback right here at the 4s, which was about here. And you can see, based on the 4s, you can see how it ripped, and then pulled back. Now, right here, it created a double bottom. So you got boom, buyers sucked it up, sellers got in, sellers couldn't get it down, buyer stepped in, pulled it up, and then held it, and then took it off again. So that was a pretty good move, and it was all really anticipated. I just sat there and waited till the price action formed in such a way that gave me the confidence to jump in. So I dumped most of the shares off in the 460s. I got a few off in the 30s, but most of it was in the 460s, 470s, and we just had a clean move. It was just a really good move, and I was proud of the fact that we were able to get it so early off of that downtrend break. And that was a 5-minute downtrend break, pushing it up higher. Now, even if you had got in super early or anything like that, as long as you respect your risk, as long as you know where you're getting in and getting out, that shouldn't be a problem. I, for one, like to play that 15 cent risk. That is an ideal trade. When you load up 10,000 shares, 15 cent risk you $1,500. Now you have the potential to make, $10,000. And today was one of those days that I did very well. Didn't add, more so just brought into, sold into every stuff that they tried to do, and I didn't purchase. Now, one thing I would have done differently is definitely getting a trade and add to your winners. Always add to your winners, but the range wasn't really there. This had about a 60-70 cent range, so the range wasn't really there to be adding and subtracting. It's more so get in large size at a decent price and then let her rip. Just let her go at that point. So that turned out to be a very good trade. Tnxp turned out to be a very, very good trade. So guys, when you're looking at these charts, it's developing the pattern as you see it, as it's coming along, or as it's coming about why you're in the trade. A lot of people ask, well, how do you do that? The biggest thing is paying attention to the price action. Pay attention to the swing lows. You see that it's grindy. If we go back and you look at another chart, you can ideally see the grinding action. So what happens in those cases is you're able to see the grinding action. And let me show you that off the 15. You can see right here, this is right here. So I'm showing you this double screen so that you can kind of see it, get an idea of how we look at this. So when you see this, look at the cursor. You see how it went up, pulled back, created a low. So the low was here. Then you pulled up and created another low right here. So you see how it's stepping up, or how it looks when it's stepping up. And again, this is just based off of learning the price action, knowing what to look for. So when I see something like this, and then I see it again here. You can see that it was stepping up. Held support, bounced off of it, created new support, and then eventually broke out with some volume. Again, look at the abnormal volume cues. As you can see, give you another way of looking at it. As you can see, once we had this massive pull down, volume just kind of dried up. You know, we get this pull down, and then they came in and sucked it back up. So you had this U shape in volume to let you know that things were about to go the opposite way. So it's definitely something that when you're trading, you want to pay attention to. Look for those U-shaped volume. And what I mean by that is it sort of looks like a Tetris piece. And this one looks like a Tetris piece to me, which really is just a volume. We had this dip down, back up in volume on a downtrend. So it had to exhaust itself. This is where it exhausts. They tried to come back, higher volume, couldn't get it higher. I'm sorry, lower. So when the stock did this and went lower, we couldn't go higher. The only place we could do was go higher because we couldn't get any lower based on the volume. They pulled it up, and then again, this was on low volume. The volume now is starting to get long on the green side. The green candles are starting to get long versus the red candles used to be long. That's where all the energy. So you can see the shift in the volume just based off of looking at where the previous volume or volume cues were. If you're seeing that the shorts are predominantly the ones that got the longer wick candles or longer volume candles, then you know that the shorts are in control. The bears are in control. When you start to see the bias, whereas it got exhausted, and again, it's just paying attention to the price action. When you can see this in real time, that, oh, you're exhausted. You've made your down move, and then you gotten exhausted. And then it let me know that you got exhausted. You popped it back up and try to go back down again on higher than the previous bar's volume. You tried to pull it down and got stuck. So now the volume has shifted. Now all the candles, so look at all the candles from here. This is red, a lot of volume. Red, a lot of volume. So look at the volume. Green, not so much volume. Got a red candle here. Next big move, red candle. Now when the bias switch, so we did this up move, pull back. This is when the bias switched. So now we can look at the green cues or green candles. Green candle, a lot of volume. Red candle, not so much. Next kit candle, a lot of volume. Red candle, not so much. Didn't outdo the green candle. So then green candle, a lot of volume. And then you see it start pulling up. So paying attention to the arithmetics of the volume and price, that'll let you know which way the stock is going. And then you have the confirmation of the double support. You have all those different things. All these different things handling together. Now, what I basically just showed you, risk and resistance and support. I showed you volume. I also showed you the trend, and then a particular pattern. So when you have these four things mastered, now it becomes a situation where, yeah, I don't really need a lot of indicators. Yeah, I don't really need to see a whole bunch of different things. Yes, the indicators help. Yes, they're pretty good. They're dope to have. But realistically, you're looking at everything based on price and volume. So you already know, or you can already see which way the stock is going and how to place your risk, because you already seen which way it's going based on the price and risk, based on the price and volume. These are the things that you look at, or naked traders look at when they're placing trades. So this is how we are able to get in so much earlier than everyone else. When everyone else is trying to buy the break, we're collecting at the support. So something to think about in your trading, how to implement it and get better at it. Guys, if you have any questions, concerns, reach out to me on the Discord as well as through the comments. And as I tell all the traders that are new and old, when it comes to trading, stay studying and stay focused.